Hi, after recording the first video about how to buy stocks and talking to some friends, I decided to also record a content on what are stocks actually and why the prices go up and down. Thinking about what's the best way of approaching this content, I decided to do a small animation on this. For explaining this, let's imagine that there's a company named Bubba Tea. Bubba Tea is a bubble tea shop located in Berlin. Bubba Tea is a private company, which means that the shares are not offered in the stock market. Bubba Tea has two partners, Max and Jenny. Each one has 50% of the ownership in the company. But due to the big success of Bubba Tea shop, Max and Jenny want to raise capital for expanding the business. They have some alternatives. For example, taking a loan from the bank, raising private equity, or raising capital in the stock market. They decided on the third option. In order to do that, they divided Bubba Tea into 100,000 small pieces, called shares or stocks. Each piece will be offered to the public for 10 euros. This means that Max and Jenny think that their company is worth 1 million euros. The pieces of the company will be offered to the public in a day called IPO, Initial Public Offer. In the IPO day, Max and Jenny will sell a portion of Bubba Tea to the public, and everyone that has access to the stock market will have a chance of buying shares and be a partner of Bubba Tea. So the IPO day arrives. Bubba Tea common shares are listed in Frankfurt Stock Exchange, and a lot of investors partner in the company. Bubba Tea cashed out 1 million euros, and the management can finally use the cash to grow the business. After the IPO, the stocks keep getting traded by the public in the stock market, and investors can offer to sell, unask, or to buy a bid at any price that they wish. Of course, that the seller must find a buyer, and the buyer must find a seller with matching prices. Imagine another example. Marina is a private investor that bought 30,000 Bubba Tea stocks for 10 euros each during the IPO, giving her a 30% ownership on Bubba Tea. Marina just saw a better offer somewhere else and already wants to cash out her investments. But Marina now thinks that each stock of Bubba Tea is worth 15 euros, and she opens an offer to sell her stocks in the market, unasked. On the other side, Pedro, also a private investor, saw a big potential in Bubba Tea and wants to be partner on the company. So he sends an offer to buy 10,000 stocks of Bubba Tea for 15 euros each, a bid. As Marina's asking price matches with Pedro's bidding price, a trade will happen. So Pedro just bought 10,000 stocks of Bubba Tea from Marina for 15 euros each. And the Bubba Tea stock price raised to 15 euros in the market, as every time that a trade is executed, the price for which the stock were traded turns into the new stock's price. What changed for Bubba Tea now? Bubba Tea that was worth 1 million euros just a couple of minutes ago now has a new valuation of 1,500,000. Also, now that Bubba Tea is a public company, they have to share financial and accounting information quarterly. This report is called 10Q, and once a year they must file a full year report. This report is called 10K. As these reports filing contain operational, financial, and accounting information, they help investors to better evaluate the true value of the company and analyze if the price that the company has in the stock market matches the company's true intrinsic value. Benjamin Graham has said, "In the short run, the market is like a voting machine, tallying up which firms are popular and unpopular. But in the long run, the market is like a weighing machine, assessing the substance of the company." This means that even though in the short run stock price might fluctuate unreasonably a lot, in the long run it is the true value of the business that moves the stock price. This disparity between stock price and company value creates opportunities for investors. Finding companies that have a higher value than the current offered price might be a good investment strategy. This is the basic principle of value investing. Thank you for watching. I'm thinking about creating new videos about how to evaluate companies and investment strategies. So if you want to get notified as soon as I upload the video, just subscribe to the channel. And if you like this video, give it a like. Ciao!